Assalamualaikum warahmatullahi wabarakatuh. So today we are going to present chapter 25 in Audit 2, which is other assurance services. First of all, let me introduce our group member. I am Nushaira binti Shuib, and we have Afiq Kushairi, Anis Fakira, Afiq Amizaki, Hairin Kamilia, Fatin Hazika, Amar Rizman, and Adib Aziz. So proceed to the next, our learning objective 1, which is understanding the level of assurance and evidence requirement for review and compilation services. The standards for compilations of financial statements are called International Standards on Related Services, or ISRS 4410, where it was issued by the Accounting and Review Services Committee of the AICPA. Also, the assurance provided by compilations and review is lower than audit, since they required less evidence and cheaper than audit. Okay, as you can see on the slide, is a graph that shows the relationship between evidence accumulations and assurance attained. If you are unclear with this figure, please refer to your textbook on page 752. Review services. A review service engagement is designed to allow the accountant to express limited assurance that the financial statements are based on the accounting standard. Next, procedure suggested for review. Firstly, we need to obtain knowledge of the accounting principles and practices in industry. Next, we need to obtain some information about the client, including accounting records, business transactions, and others. Third, the most important one, it is to make inquiries of management to determine whether the financial statements are fairly presented or not. Fourth, perform analytical procedure and proceed to get the letter of representations, and lastly, preparation of the documentation. So this is the example of the review report, where it is very similar to audit report. Next, compilation service. A compilation service is defined as one in which accountants prepare financial statements and present them to a client or third party without providing any CPA assurance. So, when accountants submit financial statements and expect them to be used by third party, they are required to at least issue a compilation report that accompanies the statement. Therefore, there are 5 requirements for compilation. Firstly, document services to be performed and a description of the report. Next, knowing the industry accounting principles and practices. Third, know the client. Fourth, determine whether the client's information is satisfactory. And lastly, review the compiled financial statement for any obvious omissions or errors in matched and approved accounting standards. Okay, next, form of compilation report. There are 3 forms of compilation report, which is first, compilation with full disclosure, compilation report no disclosure, and lastly, compilation without independence. So this is the example of a compilation report with full disclosure, and next is the example of compilation report without disclosure.
Assalamualaikum, my name is Muhammad Afiq bin Muhammad Kusairi, and I'm going to continue with the learning objective 2, describing the special engagement to review interim financial information for public companies. This interim financial information statement are the responsibility of the company management. It is conducted to review in accordance with the standard of the Public Company Accounting Oversight Board, PCAOB. A review of interim financial information consists principally of applying analytical procedure and making inquiries of persons responsible for financial and accounting matters. It is substantially less in scope than an audit conducted in accordance with the standard of the PCAOB. The objective of which is the expression of an opinion regarding the financial statement taken as a whole. Moving on, the review of financial information for public companies. The first one is the Security Commission requires a quarterly financial statement to be reviewed by the company external auditors. The auditor who engaged to perform a review of interim financial information should perform the review in accordance with this ISRE through performing an audit of the annual financial statements. The auditor obtains an understanding of the entity and its environment, including its internal controls. When the auditor is engaged to review the interim financial information, this understanding is updated through inquiries made in the course of the review and assists in the auditor in focusing the inquiries to be made and the analytical and other review procedure to be applied. Next one would be a public company interim review includes the 5 requirements for review service engagement. The individual performing a review engagement must be a licensed practitioner. The practitioner is required to obtain evidence directly rather than relying on evidence provided by third party. He or she must also perform procedure to reach a conclusion on whether anything came to their attention that causes them to believe that the financial statements are not prepared in accordance with the applicable financial reporting framework. The review procedure that a practitioner is required to perform include inquiries of the accounting practice used by the company, representation from management on the accuracy of the financial statement, management responsibility for internal control system, management responsibility to detect and prevent fraud, information on subsequent events, knowledge of fraud, ratio and relationships of recorded amounts, analytical procedure on comparison, receipt of appropriate financial information, and procedure for recording financial information. Moving on to the next slide, which is a review for public company does not provide a basis for expressing a positive form opinion. A review engagement is also known as a limited assurance or negative engagement. During an engagement, the auditor performs inquiry and analytical review procedure to provide a moderate level of assurance required to provide negative and assurance reports. The next one would be the review is conducted according to the International Standard on Review Engagement ISRE 2410. The International Standard on Review Engagement ISRE 2410 is the review of interim financial information performed by independent auditor of the entity. It should also understand by reading the in context of the preface to the International Standard on Quality Control, Auditing, Review, and other assurance related service, which set out the application and authority of ISRE. That's all from me. Thank you.
My name is Anis Fakira binti Batia. So I will continue the presentation. Next, we are going to look on attestation engagement and specifically distinguish American Institute Chartered Public Accountant AICPA attestation standard from auditing standards and now the type of engagement to which they apply. Now, auditing is a form of attestation that basically we have to distinguish auditing from other attestation. Basically, auditing is a form of attestation. Alright, next. So, what is attestation? To attest to something is to be a witness, confirm, or authenticate, validate, verify documentation, a confirmation or authentication. This is what attestation, where attesting to financial statement, this is what we do. Well, because a chartered public accountant CPA do this to do a variety of audit-like services. So now, other than only testing to the historical financial statement to this audit, they wanted to do audit services known as attest services. So we don't only audit financial statement, we may want to make sure that the company is adhering to the loan agreement. So, the example of an attest services is when a bank requests a chartered public accountant CPA to report in writing whether an audit client has adhered to all requirements of a loan agreement. An attestation engagement client has adhered to all requirements of a loan agreement. An attestation engagement, the chartered public accountant CPA reports on the reliability of information or an assertion made by another party. What attests that an issued report, yes there are or no there are not, based on the loan agreement. We try to find out if there are stating is correct. The chartered public accountant CPA firm is hired to determine at the case or not. Another attestation service is sometimes attestation website is the most secure or the most reliable. Right. Next, attestation engagement. So first we are going to look on attestation standards. The American Institute Chartered Public Accountant AICPA has issued 11 attestation standards. They are stated in sufficient general terms to enable chartered public accountant CPS to apply them to any attestation engagement other than auditing. Those are similar to the 10 generally accepted auditing standards GAAS. So basically to friendship when we do attestation services, so check out attestation. Auditing is the one thing is a foremost attestation, and we have other attestation other than auditing. This makes sense. So auditing is the foremost attestation, but the other attestation services it can be separately. To provide additional guidance, the Auditing Standard Board of the American Institute Chartered Public Accountant AICPA issues statements on standards for attestation engagement SSAE, or known as attestation standard. Attestation standards are established by the Auditing Standard Board following the same process used for auditing standards. So next we go to types of attestation engagement. The Auditing Standards Board decide not to attempt to define potential boundaries of attestation engagement in conceptual terms because new services are likely to arise. For example, PricewaterhouseCoopers has been attesting to the balloting for the Miss America contest for decades. By attesting to compliance with environmental protection laws started only in recent years. So attestation could be anything. Well, the American Institute Chartered Public Accountant AICPA and the Canadian Institute of Chartered Accountants CICA have jointly developed assurance services related to e-commerce and information technology. This group of services, known as Web Trust and Systrust, are performed under the attestation standard. In addition, the American Institute Chartered Public Accountant AICPA has developed specific attestation standards in these areas. There are prospective financial statement, reports on internal control of service organization, pro forma financial information, reports on internal control over financial reporting for private companies, compliance with laws and regulations, agreed upon procedure, engagement, and management discussion and analysis. Lastly, we go to levels of service. Attestation standards define 3 levels of service. When someone introduces you have to know its examination that you're doing, its reviews, where it's agreed upon procedure. Those you have to know. What is the examination versus reviews versus agreed upon procedure? An examination is result in a positive conclusion expressed in the form of an opinion. You are expressing an opinion that, for example, they are in compliance, whatever the criteria. You express the opinion and the opinion has to be positive. Chartered Public Accountant CPA makes a direct statement about whether the presentation of the assertions taken as a whole conforms to the applicable criteria. Basically, as I just said it, we have to say if they are in compliance. The report on examination is unrestricted as to distribution by the client after it is issued. we have to be careful. You are issuing this report in your customer wherever high risk. This report have to write as examination to the service that report to anyone or everyone. So be careful what you put in that report and what you say. This means that client can distribute the information widely, including to prospective investors and for sales and marketing purposes. Next, we look when attestation, basically a level of reviews. Chartered Public Accountancy (PA) provide a moderate level of assurance that is expressed as a negative assurance conclusion. Basically, we are not aware of any issues. We don't say it is compliant. We don't aware don't it complies. Chartered Public Accountancy (PA) report states whether any information came to the Chartered Public Accountancy (PA) attention to indicate that the assertions are not presented in all material respect in conformity with applicable criteria. So, without the testing, we don't say anything that tells otherwise. A review report is also unrestricted in its distribution. Anyone therefore have to very careful of what they say. Review engagement are prohibited for most services where specified attestation standards have been issued, such as prospective financial statements, because of the difficulty of setting standards for the limited assurance provided by reviews. So you cannot conduct reviews attestation specified attestation standard when we have prospective financial standard that have specific attestation standard that you can do a review. The last one level of attestation standard agreed upon procedure. As agreed upon procedures between two parties, the Chartered Public Accountancy (PA) firms and someone else, the Chartered Public Accountant CPA and the customers, and whatever they agreed on its procedures. The degree of assurance varies with the specific procedures agreed to and performed. What are you doing? It all depends on what we agree on. Accordingly, such reports are limited their distribution to only the involved parties who know the procedures the Chartered Public Accountancy (PA) will perform and the level of assurance from them. Of course, if I agree with you on something procedure, it only applies to you and me, nobody else to the parties involved. I'm giving you this assurance to you specifically. You cannot distribute the information to the outside world and claim it enough. It's for everyone. The report should include a statement of what procedure management and the CPA Chartered Public Accountant agreed to and what the Chartered Public Accountancy (PA) found in performing the procedure. What we have to just specifically say what we do, what we will agree in the file, and what we found. But again, the report is rated as the distribution you cannot give to everyone. Alright, this figure summarizes the reporting levels for attestation engagement. Types of engagement: examination, review, agree upon procedures. Amount of evidence for examination: extensive, review, significant, and agree upon procedures varying. Level of assurance for examination: high, review moderate, agree upon procedure varying. Form of conclusion: for examination positive, review negative, and agree upon procedure findings. And the last one, distribution: for examination and review general, but agree upon procedure limited. So that's all for me. I will pass to next presenter. Thank you.
Assalamualaikum and good morning everyone. I would like to continue the presentation with learning objective 4, which is content of web trust and trust insurance service. Before I start the presentation, I would like to introduce myself. My name is Muhammad Afiq Amizaki. So let's start and let's jump to the web trust. What is web trust? Web trust is an attestation engagement. A client engage a CPA to provide reasonable assurance that a company website comply with certain trust service principle and criteria for one or more aspect of e-commerce activities. So, in fact, in a web trust attestation engagement, AICPA or the other name AICPA and KICA or the other name is CICA engaged in 1996 and formed a web trust, so what we call today, in 1996. The organized is like an examinations according to standards in the intention to engage and to release the information in order to gain the public trust. So, the examination is focused on the business, integrity and protection of public information, and the license must renew every 12 months. The CPA will perform a e-commerce test site to ensure the current site is safe and continue of comply with trust service principle. So, that's all for the first slide. So let's begin with the next slide. The next slide is the 5 task service principle. The first one is security, to ensure the system is protected against unauthorized access from the outsider, or the other name is extender, such as both sides, physical and logical. The second one is invulnerability. Invulnerability is ensure the system is available for operation and use committed and agree. This one is not it's not really like it's to confirm that the system that offered by the company is available in order to ensure the client is not getting a scam or fraud. So the third one is processing integrity. Is ensure the system is processing is complete, accurate and timely and authorized. The fourth one is online privacy, to ensure the personal information obtained as a result of e-commerce information is collected and used and disclosed as the agreement stated. Because this one is really particular by the standard, because online privacy sometimes the company is not really it's not follow the rules. They sell the customer information in order to gain a side incomes. This one is for the some country, the customer informations, the punishment is really harsh. So the last one is confidentiality, to ensure the information designed as confidential is protected as committed. This one to gain the public trust in order to go concern the business. The first one is to make sure the to make sure the customer information such as card number, the card number, the address or such as digital is customer information. So that's all for the second part. So the last part is Sintrust service. In the Sintrust engagement, the Sintrust license CPA evaluate a company computer by using trust service principle and criteria. Like I said before, AICPA and KICA introduced the system, renew the system and update the system in 1999 to design and increase more valuable with the time, with the situation such as in focus like management, customer, trading, in order to gain confidence in the system and the support entire business or specific process. The system will evaluate company system by using the trust service principle and criteria and determine the capital are reliable or not. The CPA will test again until they determine whether the company are operating efficiently during the examination. So that's all for me. So I will pass to the next presenter.
Okay, for learning objective number 5 is describe engagement to report on internal control at service organization. Okay, the first one is International Standard on Assurance Engagement, ISAE number 3402. Assurance Report on Controls at a Service Organization was issued in December 2009 by the International Auditing and Assurance Standards Board, which is part of the International Federation of Accountants. ISAE 3402 was developed to provide an international assurance standard for allowing public accountants to issue report for use by the user organization and their auditors on the control at the service organization that are likely to impact or be a part of the user organization system of internal control over financial reporting. Okay, next for type 1, which is reports on the design of controls. The test design of an internal control would validate that the controls stated to be in place by the organization has indeed been established and put in place. An example test of design would be an organization that notes they have controls around the hiring process, and one control being the background checks are conducted on all new hires. In order for an auditor to test the design of this particular control, the auditor would look to see that a background check was conducted on one example recently hired employee. This information for the one example employee would confirm that yes, the organization has a process in place to perform background checks for new hires. By confirming this, the audit organization would be able to validate within a type 1 report that the organization has designed the control which they are claiming to have in place with regards to conducting background checks for the new hires. Okay, now for type 2, which is a report on the operating effectiveness of controls. In short, the test of effectiveness of a particular internal control is whether or not the control are operated consistently over a period of time. In the past, about typically 12 months, the test of operating effectiveness of a control is confirming that a control that is stated to be in place by the organization has been established for a period of time of 12 months with the test of the operative effectiveness of controls will be required. This actually to test the operating effectiveness, the auditor would need to look at the sample of new hires, which is more than one across that last 12 months. Yeah, we're moving on to learning objective number 6. Thank you.
Hi, Assalamualaikum. Now I will talk about special engagement to attest prospective financial statement. Okay, before we move further, let me introduce myself. Okay, my name is Norfatin Hazika. You can call me Hazika. Okay, so let's continue. Prospective financial statement refer to predicted financial statement in some future period in income statement or at some future date in balance sheet. Most CPA believe there are significant opportunities and potential risks for auditors to provide credibility to prospective financial information. Okay, let's move to the next slide. Okay, as we know, there are two types of prospective financial statement. First one is forecast. Forecasts are prospective financial statement that present an entity's expected financial position, result of operations, and cash flow. Then, for the projection is also prospective financial statement that present an entity's financial position, result of operations and cash flow to the best of the responsible party's knowledge and belief that is given one or more hypothetical assumptions. Okay, for example, projected financial statement might assume the company is able to increase the price of its primary product by 10% with no reduction in units sold. Okay, prospective financial statements are prepared for one of two audience. First, general use statement for any third party and limited use statement solely for third parties with whom the responsible party is dealing directly. Okay, next, there are three types of engagement. First, an examination engagement in which the CPA obtains satisfaction as to the completeness and reasonableness of all the assumptions. Second is a compilation engagement in which the CPA is primarily involved with the computational accuracy of the statement and not the reasonableness of the assumption. Okay, lastly, an agree-upon procedure engagement in which the CPA and all users of the statement agree on specific limited attestation procedures. Okay, let's move to the next slide. Okay, for examination of forecast and projection, there are four elements. First, evaluating the preparation of the prospective financial statement. Second, evaluating the underlying support for assumption. Then, international standards on assurance engagement, ISE 3400. And lastly is issuing an examination report. These elements are based on accumulating evidence about the completeness and reasonableness of the underlying assumption as disclosed in the prospective financial statement. That's all from me. Thank you.
Learning Objective 7. Learning Objective 7 is describe, agree upon procedure engagement. The audit is limited to certain specific audit procedures when designing and performing audit procedures to verify specific financial statement assertions. In fact, out of the various procedures that can be performed by auditors, some are more suited to verify certain assertion in respect of specific classes of transactions. Like inspection is an audit procedure based on the examination of records and document, whether internal or external, that could be held in various type of forms. The inspection of record and document provide audit evidence whose reliabilities depends on their natures and source. And then observation is an audit procedure that consists of looking at the procedure being performed by others so that evidence about the actual performance is obtained. Next is reperformance. Instead involve the independent execution by the auditor of procedures or controls that were already performed as part of the entity internal control. The second point is these are referred to as procedures and finding engagement. A review engagement is also known as a limited assurance or negative engagement. Auditor conduct a review engagement after an accountant completed the audit of a company financial statement, and therefore the auditor provide limited assurance on the accuracy of the financial statement. Like first, the management is responsible for preparing the main financial statement, and the practitioner, the individual performing a review engagement, must be a licensed practitioner. The practitioner is required to obtain evidence directly rather than rely on evidence powered by the third parties. And the third one is the intended users. So the intended users of the financial statements can be the shareholder, investor. The review engagement is conducted with the goal of enhancing the user confidence in the financial statements. The last one is the International Standard on Related Service, or ISRS 4400. Is an agreed upon procedures engagement that practitioners perform the procedures that have been agreed upon by the practitioner and the engaging party. It consists of responding to the needs of stakeholders, broadening the scope of the standard to meet the demand, providing transparency in the AUP report, which introducing the requirements and application material to clarify and whether or not the organization is required to comply with the independence requirements. And next is enhancing consistency and in the performance of AUP engagement. Clarify how professional judgment is exercised in agreed upon procedures engagement, and introducing requirement and application material on engagement, acceptance, and continuing condition and documentation. Next, I will pass to the next person.
Assalamualaikum. My name is Muhammad Adi bin Aziz, and I will discuss about learning Objective 8. I will explain about other type of audit and attestation services that fall within the auditing standard but are not in accordance with GAAP or MFRS. There are three most common services such as other comprehensive basis of accounting, audit of specific elements, and debt compliance letter. Now, we will look at the first services, which is other comprehensive basis of accounting. In real world, auditor is often tasked to audit statement that is prepared using another basis or standard. Since this statement is prepared using different basis, it also requires different reporting requirement. For an auditor to audit this statement, he or she must fully understand the accounting basis that the client follows, and the auditor must also clearly mention in the audit report that the audit is prepared using different basis of accounting. At the same time, terms that is usually used for standard audit cannot be used, such as balance sheet or income statement. Instead, titles such as statement of assets and liabilities arising from cash transaction can be used to inform the user of the report that the opinion given by the auditor is based on different basis. First will be the cash basis or cash modified basis. In cash basis accounting, accountants record income when they receive it and report expenses when they are paid. It can record things like cash, equity, and expenses. However, it is hard to use cash basis accounting if accountants want to track inventories, fixed assets, or loans. Meanwhile, modified cash basis is an accounting method that combines elements of the two primary bookkeeping practices, which is cash and accrual accounting. This method allows accountants to include long-term items just like accrual method, such as account receivable, account payable, fixed asset, or long-term liabilities. The reason clients want to use modified cash basis because it gives a clear financial picture of their business, especially for non-accounting users. Second would be the tax basis. Here, the financial statement will follow the provision of the federal income tax law, thus changing the basis of the statement. It covers a range of reporting alternatives, from cash to full accrual, depending on the nature of the taxpayer and in some circumstances, the taxpayer selection. The statement may include both non-taxable revenue and non-deductible expenses. The statement should also treat changes in accounting principle in the same manner as on the tax return. Many small businesses like to use this method. Third will be basis used to comply with the requirement of regulatory agency. Common examples include the uniform system of account required for railroad, utilities, and some insurance companies. Just like tax basis, the financial statement for heavily regulated industry might be different due to the nature of the business. This basis is imposed by the law created by the central government. Fourth would be the financial framework for small and medium business. The framework draws upon a blend of traditional accounting principle and accurate income for tax method of accounting. Lastly, will be the definite set of criteria having substantial report. The price level of basis accounting, the method of accounting must be applied to all material items in the financial statement. Next, we will discuss about specific element account or items. Sometimes, auditor will be asked by client to audit on specific aspect of the financial statement. For example, report on the royalties, profit participation, or provision for income taxes. Specific element may be obtained directly from the financial statement or notes and may represent combination of elements derived from the statement. The main problem on reporting about specific element of the financial statement is the changes in the materiality. The value of materiality on the overall financial statement will be higher compared to the specific element. For example, if the sale account is being reported on separately, a smaller misstatement will be considered more material than it is when compared to the full financial statement. The materiality is also affected by the nature of account and other accounts related to those that are being audited. For example, in expressing opinion on cash sale, the auditor must also consider the effect on the account receivable on sale. Another example is a report on audit of sales and retail store in a shopping center to be used as a basis for rental payment. There are 5 common basic services that is provided in specific element, such as audit on the specific element, review on the specific element, compilation on specific element, agree upon procedure, apply to specific element, and report on the specific element as supplementary information. Next, we will discuss about debt compliance letter. So, what is debt compliance letter? It is a letter issued by auditor on the behalf of the client to be submitted to the lender. When the client enters a loan agreement, the lender might want a report from the auditor to verify a few of conditions in the report, such as certain dollar amount of working capital at a specific date, and to obtain an audit report that states whether the company complies with the state working capital requirement. To submit the letter, the auditor can issue an entirely new report about the debt compliance or add a statement or opinion in the certified financial statement. However, there are few rules before auditor is allowed to issue the debt compliance letter. First, the auditor can only evaluate matters that he or she is qualified, such as interest payment, dividend, working capital, or debt ratio. However, the auditor cannot give opinion outside of his qualification, such as the title of pledged property, since that fall under the jurisdiction of legal question and should be answered by lawyer. The second rule is the auditor should only provide a debt compliance letter for a client for whom the auditor has done an audit of the overall financial statement. This is important because the auditor has already understood and verified the entire client business before he or she issued the letter. The auditor opinion in the letter should be treated as negative assurance by exclaiming that nothing came to the auditor attention that led him to believe there was no compliance. Negative assurance usually arises in the absence of positive assurance. A positive assurance is considered stronger and means that the auditor has done sufficient work. But in negative assurance, only a certain part of the certified financial statement is verified because auditor only gathered evidence that is related to the lender demand. It is important to note that the negative assurance is not stating that any wrong activity did not occur. It is just stating that the auditor could not find any proof of wrong activity. That's all from me. Thank you very much.